87%. That's the probability the market is now pricing in for a Fed rate cut this December. The odds just went from maybe to pretty much a sure thing.
And this isn't just wishful thinking. That 87% chance is backed by over $16.6 million in notional volume. We're talking about massive conviction here. The money has spoken.
But here's the real question. How did this certainty in economics ripple out and cause a complete U-turn in some of the riskiest assets out there? We're going to get into it. And hey, if you find this valuable, drop a like and share this.
Okay, first up, the Fed's certainty signal. This is really the main event, the thing that drove everything else this week.
Just look at how fast this happened. We started the week at 62%. Decent odds, but nobody was popping champagne yet. Then boom, by Friday, we're at 87%. That's a 25-point jump in just 1 week. The market basically went from uncertain to completely convinced.
So what's the immediate domino to fall? Well, let's look at crypto, because the reaction there was, frankly, explosive. If you're into this kind of analysis, make sure you subscribe to the YouTube channel.
This says it all, doesn't it? On the left, at the start of the week, the market was terrified about Bitcoin's floor. People were asking, how low can it go? But by the end of the week, that fear just evaporated. The sentiment did a complete 180.
And here are the hard numbers. On November 22nd, traders were giving it a 76% chance that Bitcoin would fall below $80,000. 5 days later, that probability absolutely collapsed to just 31%. That is a staggering 45-point drop in fear. So the cause and effect here is crystal clear. As the odds of a Fed rate cut went through the roof, the market's appetite for risk came roaring back. Cheaper money on the horizon means traders are suddenly way more comfortable betting on high-growth, high-risk assets like crypto. For more real-time updates like this, follow us on Twitter.
But here's where the story gets weird. This is the contradiction. While all this action was happening, one huge market with millions on the line just stood completely still.
We're talking about the political markets. Specifically, this one contract asking who the Democratic nominee will be in 2028. Look at that volume. Almost $29.5 million just sitting there waiting for something.
And this just puts it in perfect contrast. The Fed rate cut odds, they shot up 25%. The odds on the Democratic nominee, they moved basically 0%. Absolutely nothing. Flat as a pancake.
So what does this tell us? It tells us the market is incredibly confident betting on the next few months of economic relief. But when you ask it to look further out, to the long-term political future, there is zero conviction. That $30 million is completely paralyzed by uncertainty. If you're finding this useful, drop a like and share.
All right, let's put it all together. What is the one big story that all these different signals are telling us right now?
It breaks down into 3 parts. First, certainty. The market is sure a rate cut is coming, and that's driving short-term optimism. Second, the consequence. That optimism lit a fire under risk assets, like crypto. And third, the contradiction. All that short-term confidence disappears when you look at the long term, with nearly $30 million frozen in political markets. Be sure to subscribe to the YouTube channel for more deep dives.
And that leaves us with this final, really important question. Is all this celebration about the short term just masking a much bigger, much deeper risk over the long term? The data suggests it's something we all need to be watching. Subscribe and drop a like below. Follow us on Twitter for more updates, and we'll see you in the next one.